Hey guys, how's it going? I just want to jump on to do a July trading recap. I want to walk through the TradeZella and show you how we performed each week, but also just to show you how if you focus on your consistency, the results will come from a dollar's perspective. So here's TradeZella. This is our trading journal software, and it's a great software. It's the best I've used, and I would highly recommend if you're into trading or learning or even if you're proficient in trading, to really journal every single trade. It's really important to reflect on how you performed, how you felt during the trade, and you can really take away a lot of lessons from the journal when you reflect. If I have to rate how I traded this month, I would say it was close to 7 out of 10. There were definitely some areas that I could improve on, and there was some trades that I shouldn't have taken. So these are some of the lessons that I learned by journaling my trades, and these are lessons that I will focus on moving into next month's trading month. If I can focus on clearing up some of those mistakes, I think I could probably get this closer to a 60% win rate, which would be a really great result. As you can see, we achieved a 55.38% win rate, which is great. So anything over 45-50% is highly profitable. And our net P&L result was 9%. 9% is a great return for a month, and is something that I strive for, and is something that we don't always achieve, but is definitely possible with the strategy that we have. I'm a swing trader. I use the TPM strategy, and it works really well for my lifestyle and the time that I can commit to the charts. If we just head down to week one, you can see that week one was a really strong. We made 4%, and that was out of maybe two or three trades. You can see there's more trades, but this is because it links to multiple accounts. I have multiple accounts linked to my trading journal. Week two, we did a 1.5% week, which is still great. And you can see with week three and week four, they weren't as profitable, but we didn't lose significantly. These were actually the weeks that there were some obvious mistakes. The hardest thing with trading sometimes is patience. And when you're waiting for those setups, you can sometimes see or look for things that you shouldn't. And I would say that happened in this week 4. There was definitely 2 trades upon reflection that I shouldn't have taken. And these are lessons that I will take into next month. On reflection, they were probably taken because if you see week 3, because week 3 was a low week, your expectation for yourself from a performance standpoint is always to achieve week 1, week 2 results. So that kind of impatience probably created some errors that I shouldn't have taken, but I guess we recovered in this last week here. So the last week achieving 3%, which recovered a lot of the losses, but at the same time took more profit as well, which is great. With the Zella score, it's 79%, which is great, and I really try and focus on keeping this high. I think another lesson that I took away from this week was there were definitely some trades that we cut a bit early. I like to be in and out of my trades, but at the same time, the strain of holding trades for a longer period of time can really get to you. So I did close those out, and then upon journal and reflection, they did hit take profit eventually, but took longer than expected. As a trader, my biggest focus is about the consistency. If I can really zone in on the performance of myself as a trader and the performance of myself as a human, all the results will come. So, a 9% month, whether you're trading $10,000, $20,000, $100,000, those returns and those results stack up. So whatever your unit of risk is, say for example, you're risking $1,000 a trade or $2,000 a trade or $10,000 a trade, as long as you can stay consistent with your results and improve your win rate, and also over time increasing your P&L per month, those results will stack because you will become more and more comfortable with your unit of risk. So that is what I like to focus on, and I think it's really important for most traders and also new traders to really think about that. When you start out, sometimes you don't have the capital to trade, and therefore you're in a rush to really make a lot of money. You know, when you're risking $100 or $200 or $50, your win might not feel like a lot, you know, and therefore you're trying to make bigger returns, say for example, a 5R trade, a 6R trade, so you can feel like the win that you made at the end is significant. But just remember that if you can just focus on the craft to ensure that your consistency in taking profit and consistency in taking good trades is there, the dollars will come in the future. I think that is the one most important thing, and a lesson that I've learned over time as well. You can see with 9%, right? 9% on $1,000 is not much. And 9% on $10,000 might not be much for some people. But as you scale up your capital, it can be very significant. I'll just change this to dollars just to show you what that could look like. You can see this is $86,000, but that's because the capital has scaled up over time. So I think it's really, really important to think about those things as you move into your trading career. Don't rush to take profits. Don't rush to take bigger gains. Just focus on consistently taking profit with your rules and with the strategy. For myself, it might be a 2R trade consistently. And as you can see, pretty much every single one of these trades that took profit was a 2R trade or less. And you can still achieve these results. But that's because you scale up your capital and you improve on your consistency. Thanks for listening, guys. I look forward to talking to you guys in the community chat and sharing more of the journey.